Today we will take a look at a few asset classes through the eyes of the wave principle. I am your host, the Cowboy. This is Elliott Wave Cafe. Let's get started. All right, so I wanted to cover the S&P 500 and the NASDAQ 100, the gold, oil, the dollar, and something that I haven't done in a while, the India 50 in here. I think this is, something that can give us a little bit of a preview of what's happening overall with the markets, and we can try to see what the positioning is and where the cycles are, what could be some of the turning points ahead. And let's get started. So the S&P 500 is the first chart that we're going to take a look at, and I think at the longer time frame in here, and you're looking at the 1 week, the chart goes back to about 2012. I think we're still in a pretty strong uptrend at this higher cycle, super cycle degrees. We're continue to be in this kind of secular bull market, and we have every once in a while we have these pullbacks that happen in the opposite direction of the ongoing trend, and this could provide opportunities to join the larger market. And one of those pullbacks, it's actually happening right now. It started back at the beginning of this year. The markets got tired toward the end of last year. We all know what's going on with the Fed, with the increase in interest rates, with the inflation narrative, and the markets have been selling off into what looks to be a pretty decent corrective structure. So just to recap here, we're looking at the longer term uptrend in the S&P 500, followed by shorter term correction. So these are bear markets within a larger uptrend. And what we're trying to see, if we're trying to find out, how soon this bear market will be over, and what would be some of the signs that we look for to start to give us confidence that a new uptrend is beginning into this market. So I'm looking at this move from this COVID lows to this highs in here as a wave 1, and then this pullback here as a wave 2, with a larger bull market upcoming third wave coming down the line. This is how we're looking on the 1-day time frames, where we're selling off in the first initial decline that was in the spring of this year in this larger ABC for a wave W. Then we pull back in a wave X at 46.37. This wave X traveled all the way to the prior wave B highs. Then we sold off again impulsively in another wave A decline, followed by a B wave into 41.77. This is the cash market I'm looking at. And then we sold off again in an impulse here in a wave C, off a wave Y, off a wave 2 at 36.24 were the lows. The anchoring of the second wave, it could still be premature, as this wave C could continue to unfold lower. So one of the signs that I'm usually looking for is if we're able to start creating a series of higher highs and higher lows from current levels from the levels of 36.24. So far we have done a little bit of a high in there, followed by a pullback, and then we have failed to make a new high on there. And if we're able to do that, then there's going to be an increased confidence that the market has probably found a low and can continue to push. An even more important level for these markets to take out will be this 41.77. If we're pushing above these levels, it's very likely that this correction will be complete, and we can anchor a corrective move finished up into these levels here at 36.24. Sure, this market can continue to trend lower until you're actually breaking above 46.37 and above these new highs in here, because it could create even more of a complex move. It could become a WXY, and then you can have another X wave and then another decline. But it matters how we unfold from here, and then how we're going to overtake this 41.77. So until these levels get taken out, so first will be the swing high in here, and then this B wave. it's fair to assume that there is a high chance that this correction can continue, and it could just continue to push lower in here into an even more complex unfolding. So for me, the two important things are that we stop making new lows, and then we start creating a series of higher highs and higher lows in here and build a momentum and overtake this level. That would be the first clue that this market is ready to rally higher. So this is what I'm looking for in the S&P 500 from where we are in the current state of the markets. The NASDAQ, it's also in a pretty big secular uptrend as well. You're looking at this market trending higher from somewhere in 2002, 2003, 2005. This is the big, great financial crisis into 2008, 2009. And then you started a pretty good secular bull market in here in the NASDAQ 100. This, I'm counting this as a wave 1 and this is a wave 2 through a flat formation. Then we're beginning another wave 1 and another wave 2, just another corrective pullback in an ongoing uptrend towards the bottom of this channel that should resume with a move higher in here over the next few years in the next bull market. The markets are continuing to trend higher in here, and all these things in here are corrections against a bull market. Just like we've looked into the S&P 500, we have to see, confirmations from price that this correction is over. Otherwise, this can continue to, develop to the downside. The moment you break above, let's say, $6,000, then we would have a much larger problem in our hands, because then you can get into more of a secular bear market where this decline will be all the way up here. Then you're going to create a right-hand shoulder, and then another leg lower will begin. So this much stronger uptrend will start to exist. So it's important that we're holding up these levels, and we're actually holding above this 7,000. Obviously, we're very, very far above those levels, but that would be just by looking at the longer time frame. So this is a pretty overlapping structure, highly corrective, and I think this is going to resume to the upside. Here is how this looks at the smaller time frame. We're looking at the daily with the wave 1 top in there, impulse in a wave way, up in B, down in a C wave that completes a zigzag that we label that as a wave W. Then you have a sharp rally in wave X to the prior wave B highs. Then you sell low again, just like we did in the S&P 500 to a wave A, up in B, and then down in C. We're also making in here a higher low. We're going to be looking to see if we can make a higher high and overtake 12,942. This is NASDAQ. This is on the futures market. If we can overtake these levels, then we can start to create an inverted head and shoulder formation where this high tags the neckline. Then you can pull back and you can start to overturn this market and push higher into the next bull cycle. Until then, we remain into this kind of downtrending market through a series of lower lows and lower highs. So that's what's important in here. But this count will kind of match pretty well the bottom of this trend line and kind of what's happening. Of course, the C wave can continue to develop, this being a wave 1 of C, 2 of C, and then you get a 3, 4, and 5, and you can still sell lower towards $10,000 in this larger C wave. That's why it's important that we overtake 12,942, because that would negate this being a wave 1 of a C wave sequence. So this is what's happening in the NASDAQ, and that's kind of what we're looking for. The next chart I have in here, it's going to be the gold market. Gold has been a pretty interesting asset. It's been rallying ahead of the inflation getting so high towards 8.7 to 9%. So those that inflationary data hasn't actually come until this gold market actually stabilized, I think, which means that the gold market and the TIPS market, those treasury inflated protection securities, were sniffing out high inflation well before that actually happened. And this market kind of topped out at about 2100 back in the summer of 2020, or in the March 2020, something like that, when we had that big spike in the gold market. Then we corrected. Gold market tried to break to new all-time highs once again here in the spring of 2022, only to be rejected through what it almost looks to be like a double top formation, and then it's followed by an impulsive decline lower. The truth is that we are still in an trending market in here. We are making a series again of higher highs and higher lows in here. The only problem that we have is that we have failed to make a new high back here. This was the first indication that the gold market could be in trouble, and then this uptrend is actually over, and we're beginning a much larger correction. So here is what I'm looking at it right now. I'm still giving it a chance as this being possible a fourth wave at this intermediate degree of trend. This being a wave 1, then you have a flat in a wave 2 in here, and then you go up in 3 and possible another flat formation through this wave A, a complex move in here, then you go up in B, and then you can do a 1, 2, 3, 4, 5 for a wave C if we're able to stay above 1676. These levels in here are very, very important for the gold market. I think if you break below those levels, the chances of a much larger decline in gold into a different structure are increasing a lot. So in my view, I think that we need to hold these levels, maybe stop right above those levels and then start to push higher. If that doesn't happen, I think gold can continue to decline, maybe even back towards 1500 to maybe 1300 or something like that. So because this move in here, it's impulsive, and if you're getting a 3-wave setback after a wave 1, and then you're going to get a wave 2, and then you're going to get a 3, 4, and 5, and you can start to decline lower. So this for the health of this uptrend, it's important that these lows in here are holding and we're not making new lows in here. All right, so that's kind of what I'm watching in the gold market, and I think I don't have the other alternate, but I think it is where there is a much larger finished structure through maybe a triangle in here in a fourth wave. This fourth wave moves back here where this B wave is, and then you have a 1, 2, 3, 4, and 5, and you have a completed wave 1, right, in gold right in there instead of a wave B, and then you're beginning, let's say, a much larger decline. So that's the risk with this kind of failing to rally. If this market starts to turn from these current levels and you're starting to get back above this $1,900 level and back above 2,000, and you're doing so impulsively, excuse the siren, I think that the gold market then is ready to rally much, much stronger, and that would be obviously confirmed the moment you break above 2,100. Until then, there is still a higher risk that this could be continuing to the downside. Again, it depends on if and how we climb from current levels, and if we hold this 1676. Another quick look at the oil market. I got two charts for you in here. I have a chart that says that oil market could be completed, this oil rally from $10 or even negative price of oil that we've had back in 2020 March, and since then we've been impulsively rallying. We hit highs of I think about $130 in the oil market, and we have been correcting since. I've been pretty vocal about this being some kind of a B wave or of a wave 2 into the oil market, and this market was actually looking tired. We sold off back almost towards this 90 to 94, but you can see just like in the gold market, those levels are holding. And for this market to continue to trend higher, it's important that this level here holds. If we're breaking below that level, I think this decline can continue to unfold until at least $70 to $60 back towards this prior fourth wave. So far the move from the highs to the lows is not very impulsive. There's still a chance that this could unfold in some kind of a fourth wave with another push higher in fifth, and then we correct. But there's cracks underneath the surface in here that are showing us that the oil market could start to roll over. So I'm just kind of holding in here, watching this 90 to 94 and a break above this level. If you break above that swing high right there, whatever that level was, 122, 123, if you're breaking back above those, then possibly, this bull trend can resume, and you can actually start to challenge the highs from 2007, 2008, I think, when oil went up to almost $150 a barrel. So this is kind of what I'm watching in oil, just kind of being cautious, with an alternate count in here that's a 1, 2, 3, 4, and that's a 1, 2, 3, possible either a flat or a corrective move WXY in here through a fourth wave, and then another push higher here in this fifth of maybe a wave or a wave 1 or whatever. It doesn't matter right now at the higher degree of trend what this is. It's just we're trying to identify how much higher can this actually travel, how tired it is, and how much more you can actually squeeze out of this move. Because if the inflation starts to come down, I mean, there is some fundamental I think bullet points in there that can argue against necessarily an oil market continuing to push strongly higher in energy. So I mean, if you can watch the commodity complex, that's been coming down quite a lot, and there's other indicators that we're watching. So just kind of cautious on oil. Again, a break above this B wave high will probably unleash another move higher here in the fifth, and nobody knows how long and how strong that could actually be, but that would be the signal to to maybe press longs a little bit in here. And if we break above this the swing low, I think you can come all the way back towards the $60 level in oil. Anyway, tricky market, but we've been trading actively here in the pro room and successfully for a few tries already. All right, so this is the oil market. I wanted to also take a look at the dollar, and for the dollar I'm going to take a look at the UUP. This is the ETF that kind of tracks the dollar there in the markets, and it's been a very, very strong performer, and it kind of started back in the summer of 2021. I'm looking at this final move in here as a truncated wave fifth, a wave 1, a wave 2, a 1, 2, 3, 4, 5, or 3, then a 4, and then a move higher, a move lower here in this fifth wave. This looks impulsive and this looks corrective. That's why I'm counting this as a wave 4 and not as a wave 1 of the next sequence in here. I think that's a pretty good signal that this was an ABC X ABC, just a complex fourth wave in here, followed by this final decline in fifth. Then didn't make a new low, so that's why we're counting this as a truncated fifth. And then the impulse actually started from these lows in a wave 1 and a wave 2, then 1, 2, 3, 4 with an extended fifth wave. Right there, right, that fifth wave at a minor degree. Intermediate wave 3 was done to a 1, 2, 3, 4, and we're in the process of finishing a fifth wave. If you watch the volume in here, it's starting to diverge seriously, and that makes me think that this is likely a fifth wave with a corrective pattern following here in the dollar. We don't know how deep it's going to be and how much it's going to pull back, but I would assume after such a move that possibly this fourth wave of a lesser degree could be targeted. And you can look at the dollar index on its own chart, and kind of you'll find a very, very similar structure, and then you can see kind of what those levels are in terms of the dollar index values. So I also have a 5V1 here to a 161.8 multiple, so that's about 28.85 in a FIB projection. So that's kind of what I'm watching in the dollar as I'm expecting it to start to get somewhat weaker in its advance higher in here. So that's why I'm watching this volume. I'm watching the RSI to see kind of how it performs as it's pushing here to new highs. The next count that I have, it still allows for a continuation higher, and it changes a little bit the subdivisions in a 1, 2, 1, 2, 1, 2. Then you have a larger third of a third in here in a 1, 2, 3, 4, and 5, or 3, 4, 1, 2, 3, small 4, and a 5 to complete a third. Then you're going to do a 4 and a 5, a 4 and a 5, and that could still mean that the dollar could still be in an upwards trajectory, mind you. I think at the smaller rate of change higher, right? The rate of of the move higher, right? The rate of ascent is going to slow down, and you're probably going to start to get much larger divergences and more of a choppy market in here in the dollar. So I think the big chunk of the move has been already made. The big gains in the dollar has already been made, and we should expect weakness to some kind of a sideways move in the dollar, moving maybe for the rest of the year, maybe in 2023 as well. So keep an eye on the dollar, because I think this one, could help some of the emerging markets, could help Bitcoin, could help some of these risk assets try to recover. And with the dollar being what it is, and with the stock markets trying to find a wave too low, all of these can kind of start to work together at the same time. So keep an eye on that and just kind of watch. And the last chart I wanted to show you is of India 50 in here. I don't know, I think it's possibly similar to Nifty 50. This is from FXCM broker. From what I've looked, the values are very, very similar and the structure is very similar, so I think it's the same market. But I'm only studying it from this decline in March 2020, and I'm looking at it as an impulsive move, which is pretty clean and pretty clear to see through a wave 1 of the lows, a wave 2, a larger third wave advance in here, a big decline here in a wave 4, very choppy, very overlapping, and then you get the next move higher in a 1, 2, 3 sideways 4, and a 1, 2, 3, 4, 5, almost like an extended fifth wave of a fifth of a larger primary wave 1. So this move here, it's done. The Indian stock market continues to be in a much larger bull trend from what I saw on the longer term charts, and I think this is just another corrective move against the trend, and it should resume higher once this decline here completes. Just like you saw in the Nasdaq and the S&P 500, the patterns are very similar to a 1, 2, 3, 4, 5 for the wave A, then up in B, then another 1, 2, 3, 4, 5 for C in a wave W, wave X. It's a fool's rally at 18,187 in the proximity of a prior wave B. Then we sell lower impulsively in a wave B, in a wave A, then up in B, and then down in a very short wave C. I'm still allowing for this move to continue lower, right, if you want. If it starts to break back above this B wave in here, I think there could be a very high chance that I could start to anchor the second wave right in here and start to think of this market maybe beginning the next leg higher. So breaking above 16,785 in the India 50, I think that's going to be a great signal for a continuation higher, and then a break above this 18,187 could unleash the next bull market. A break below these levels could mean that the next leg lower, it's already in progress, and this fourth wave area, along with some of these highs here from back of 2020 towards 13,000 could be triggered and could be attacked in here, as there's still plenty of room to come lower. Remember, once a correction starts, nobody really knows how far and how deep it will be. We just have to constantly monitor for signals that this is coming to an end, and so far these signals are not very, very strong, other than some corrective patterns that seem to have been completed. But we gotta see a response from the price, responding in here and starting to push higher and start to just like it happened back in here, right? You have a swing up higher, that high got taken out, a little bit of a correction, and then you started to rally much higher, and it's a similar story that can happen here, and you can move towards 21 to 25k in this market. Guys, if you want to trade with me and be part of my trading channel, you can come up here on the Telegram. This is the link that will take you there, and I have a promotion now, 1 month. You can get it 1 month free on the Bitcoin Pro channel, so $29 for about a couple of months. This is just for the new members. It's not valid for anybody that subscribed prior to my channel. So this is just for new clients. Same for the total access, where you have access to the chat room and the altcoins and the S&P 500, all the markets that we follow, Forex and all the other ones. You can take a 7-day trial if you want. Then you have the Bitcoin Pro channel, the Total Access Pro. These are the regular prices for yearly and all that. So go ahead and give that a try if you want. And just like always, I appreciate you being here. Please don't forget to subscribe and like and leave some comments if you will. And I'll see you guys on the next one. Thanks for watching. Bye bye.